Hello, everybody. Jim Malone here. It's Dallas Trading Floor, and it is a Tuesday, and it looks as if, who knows what's happening, but it looks as if we may have a sell signal on the Nasdaq. And so let's just get into the slides. And yep, well, it won't let me go with Facebook. Facebook is really particular. So I guess there we go. Okay, we were live on everything, but Facebook, sorry about that. Every time I try to go live and I'm not quite right on the time, Facebook cuts me off. So not a good thing, but, Zuckerberg is rich enough, so he doesn't have to worry about things like that. Anyways, here we go. It looks as if the Nasdaq is basically below 13,000. And that is the thing. Now, the next shot I'm going to show you, it shows you it's slightly above that, but trust me, since this slide was taken just a very few minutes ago, it has gone the other way. So the market direction is decidedly, at least today, downward for the Nasdaq, and also the S&P is off as well. So we were trying to get support at that very, very important 40-day line. It looks as if we have broken through that. Now, we've been in a market trend under pressure. That's this little yellow arrow here. But maybe, and we don't know, I won't know this until tonight or possibly tomorrow, but it looks like we may start to see this maybe go into a correction. We don't know. I did go short on a stock today, Lululemon. It's been a tremendous winner, but I did go short on it, shorting some stock in one of my other accounts. And I'll show you that in a second. I also have some stuff in the small portfolio, but it typically is very non-growthy type stuff. And I kind of want to show you, the layout of what I'm currently in, what I'm not in. I did two things, and this is very unusual. I went long on one stock and I went short on the other. The stock that I went short on today is Lululemon. Everyone's heard of that. It's down about $17 today, about 5%, and it just can't hold the support line. So we'll see. I'll probably be covering my short at about 290, maybe 285. Hopefully we'll get there, and then it'll see some support. But if we do go into some of the correction, it may go lower than that. So for right now, I'm short on Lululemon. I did take a position in Granite Construction, and this company is in Watsonville, California. I actually used to live very close to where their headquarters is in Monterey. Nice city on the coast, but I'm now here in Texas. This is a very good company, and I do think we're going to see some infrastructure spending. It had a very, very good number. It came out of earnings very strong. That's the reason I went into this. We'll see how it does. Its price change is up about 2% today, about 92%. Not a very exciting company, but definitely I'm kind of moving to the more unexciting companies. I'm in Ford. I'm in Halliburton, which is an oil service company. Rent-A-Center, it's off a little bit today, but it's starting to do well. And then Mosaic, this is a miner. They mine potash, which is used as a fertilizer, and it's very important. We are going to see, probably by the summer, we're going to see fairly significant rises in input prices for agricultural products. So things like tractors and fertilizer and stuff like that probably is going to do fairly well. So that's the reason I'm kind of moving over to there, because everyone's got to eat, right? I eat too much, but anyways, that's beside the point. Maybe the increase of the food prices will help me on my diet, like not eating. That would help me a lot. Okay, here's margin debt. Here's the thing, and this is why I think we may be approaching a reversal, maybe not a reversal, but a correction in the market. Typically, and you can see this little red line here, this is basically where we see some of the strongest reversals. As margin debt grows, typically, so does the likelihood that we may reverse. And we're since the beginning of the year, we're up 41.15% on the margin debt. So I do think that based on this is a very good indicator that we may be getting to a point where the market is going to sell off, because typically when the margin debt goes up, this is a harbinger of possibly a market direction change. So that's something that we got to be very concerned about here as well. Just wanted to show you again the chart for the Nasdaq. And this is a key. This is a key chart because, of course, with the Nasdaq, this is where most of all the growth stocks that I like to trade. This is where they all live. They live in the Nasdaq. They don't live in the Dow. And they don't live in the S&P. Typically, they live in the Nasdaq. We pulled back strongly. We had a good jobs report, but yet we saw some weakness. And when this was taken, it was right above that 13. It blew below that. We have a downward trending relative strength line. This is this blue line here. That's not looking good. The last time we tested was back here in November of last year. So this is very significant. We definitely November of last year. We definitely had it. We definitely had the beginning of a sell-off. I definitely remember this very well from this October period. It was not a good, we pulled back and then we pulled below the 40-day line. So that seems to be kind of what's happening here with the Nasdaq. Nothing goes up forever. And I think it's time that, maybe it's going to reset a little bit. So be ready to go. I think that we ought to be probably trying to get more into cash possibly and get ready. I'm starting to, I've gone pretty much to all cash except for the stuff that's in the small portfolio that's very counter-cyclical. And then I'm looking to possibly short some stocks. Again, I opened a short today on Lululemon. And this is Lululemon here. This is the chart for Lululemon. And this is a real favorite just a few months ago. Basically up through the end of the last year, into January, this was a super crowd favorite. But as you can see, this is kind of not that obvious on this chart, but we have a left shoulder and then we have a head, and then we're starting to see this is a right shoulder. So, we may see this thing move lower. The volume is up, the price is down. That says to me that this might be a situation which it may go lower. And I think it may go as low as, possibly into the 290s and maybe even lower. So we'll see if that works. But I put that trade on today as well. So let's see if we get to the questions here. And let me get my screen up here, open the charts up because we always want to do that. And there we go. Great. Get the full screen action. And there we go. So let's go to the questions. Thanks for holding on, everybody. First question is coming to us from Kyle. Thanks, Kyle. Appreciate it. Hi, Jim. SQQ is up 7.5%. Is it time to buy? Well, that's actually a very good shorting view. Let's take a look at the chart for the SQQQ. I took off my hedge basically at the end of last week, and boy, you're always a little bit late on that. But yeah, it's definitely up strongly. I'm going to zoom in a little bit on it. Let's zoom in a little bit on the chart here. Is it time to buy this? Well, here's the thing about the SQQQ, and I kind of want to get the zoomed in a little bit on the chart. It's going to take a second. There we go. All right, so I want to kind of show you this this chart because it is interesting. Now, when the market is in an uptrend, the SQQQ typically follows this path downward. But when the market starts to change direction, the SQQQ can be a very good investment. But the thing about it is that you have to be, one of the things about the SQQQ is that you have to be very quick on the close of it. You have to close it very quickly. Now, I opened it when it moved above the 21-day line. It is moved decisively now above the 40-day line on heavy volume. So this is a good place to possibly buy it. Now, how long should we be in this? Well, you should be in this. Here's what you should do if you do decide to buy something like the SQQQ. You should be very careful and set your stop losses not at 7%, but at about 2%. So right now, the right now, the SQQ is selling for about $14.95, and what we need to do is possibly, if we're on there, we need to set our stop loss. We need to set it extremely tight, extremely tight on this one, because this potentially can move against us very, very quickly. So here's kind of what I suggest on the SQQQ. So let me get the calculator out here. There we go. And so we're currently at 14.95 here. Let's look over to the calculator just really quickly here. So I'm going to share that out. And I want to look at, there we go. So basically here's where we're at right now on the SQQQ. It's selling for $14.95. So if we buy it now at $14.95, put that in there, we need to set our stop loss at very, very tight at about 3% lower than this. So we're going to put times 0.97. So if we buy this now, we need to be setting our stop loss at about 14.50. So here's what I would recommend possibly on this on the SQQ. If you do buy it, if you buy the SQQQ at $14.95, set a stop loss at $14.50. And this is a very tight this is a very tight stop loss. Basically just a this is basically a very 3% stop loss. This is very tight, because if this thing moves against you, it can move very hard. But this is the thing for the SQQQ. This is not like a normal stock. It's a special ETF that shorts the overall market. And I do think we are getting to a place, and I appreciate this question from Kyle very much, because I do think we are getting to a place on this where it is a potential short. Now it's just moved above this very, very key level, and let's zoom in a little bit to show you. There we go. Hopefully that will pull it down. There we go. So as you can see, it's moved right above this line here. This line being the 40-day moving average. So on heavy volume. So if you do decide to get into the SQQQ today, or possibly tomorrow if it holds, you want to set that stop loss very tightly at about 14.50. So that's a great question, Kyle. I really appreciate that. That's a really, really good question. So I think it's a good time to buy it. Now, here's the thing about the SQQQ. You don't want to hold the SQQ long. It's essentially a hedging vehicle. What you should do is not put a huge position on, maybe one full position. Now, what do I mean by one full position? Well, if you take the value of your portfolio and you divide it by 8, that's one full position. So yeah, I could definitely see putting on the SQQQ with one full position. I wouldn't go any more than that, and I would set my stop loss very tightly at about 14.50. It's currently trading. It's traded up since I've been talking. It's traded up about 5 cents. So I do think that this is a potentially good one. But remember, do not put this on unless you have a stop loss, unless you have an exit plan, because and we just went after hours. It just went up 2 cents. So this probably will pop a little bit tomorrow. But be careful if you put this one on, because it can bite you in the rear end, which we don't want to have happen, which we don't want to have happen. But that's a really good question, Kyle. Appreciate it very much. And let's take a look at the next question. So basically, hi Jim, what happened to the Nasdaq? Oh, goodness gracious. Thank you. That's a good question. Let's kind of look here at the, and I want to look at the Qs, the QQQ. That's of course the Nasdaq 100. That's the that's the that's basically the Nasdaq 100. So let me get the zoomed out here, and let's look at the Qs, and let's kind of analyze how they've been trading today. There we go. Okay, yeah, and this kind of tells the story. We sort of have fallen, and I've fallen, and I can't get up, as you can see. So it's not looking as nice as it was even yesterday. We've fallen through this key level of support here. This is a very key level of support. This is the 40-day moving average, and we've fallen through it, and we're already gapped down. You notice, I don't know if you can see this, you kind of have to squint a little bit because these aren't candlesticks. Fortunately, soon we will be getting candlesticks on this, but for right now we don't have them. But this is a gap down. This is all the way down, and after hours it's moving lower with a definitely a bar there. This is a sell signal, and it does look like, we're just going to have to, be careful on our positions. We're going to have to close up. We're going to have to close up our positions, possibly short things. I'm shorting Lululemon because I do think it's probably going to go a bit lower. I do have some positions in the small portfolio, but they're very, very defensive names. And even they've been, just trying to eke out a little bit of profit. Not a whole lot going on there. So I do think right now we are in a situation where we're gonna be a little bit constrained, and that's just the name of the game. You want to start to move to all cash if you can. I do think the market is going to go lower. Now, has it formally screwed the pooch and gone into correction? No, we're not there yet, but it's looking like we're going to get a correction. Now, how long the correction will last, who knows? But I think we're getting into a point where we may be going into a correction. So this is significant, and this is significant. How are you doing, Jim? What do you think of Lululemon? 50-day did not move under. Okay, yeah, absolutely. I shorted Lulu today. Let's look at Lulu for Lululemon. Thank you for that. LULU is the symbol, of course, for Lululemon Athletica. Kind of a cool company. Very popular. There's for yoga pants and all that kind of stuff. Looking good, but yeah, this is significant in that I think that we've moved through the 200-day moving average. This is essentially a sell signal here. By the way, we've got a we've got a spike here on the price, and then we also have, and this is key, this is key here. Now, this is a sell signal, by the way. This is a sell signal. So if you're down more than 7% on this one, sell it. What I did is I didn't own this one before. I sold it short, and I'm probably going to try to buy it back in, possibly possibly in about the 280 range. See if I can get about 20 points down. After hours, I don't know what it's doing. Yeah, it's down significantly, and actually it's actually down $5 since when I shorted it, because I shorted it right about 300. So I'm down about $4. So I made a little bit of change there. I think this is going to continue. I think it's probably going to trade up, and then it's probably going to continue its trip downwards, because as you can see, that's the trend here. It broke this key support level. It rallied to try to come back up to it. That rally failed. Basically what happened is it rallied to the 10-day line. The rally failed at the 10-day line, and then boop, it just lost all of its power. And you'll notice, if you notice now, the pressure is to the downside. There's much more selling pressure on this one. So I do think that this is likely to move lower. The first test is going to be about 284, and if it moves beyond that, below that, about $10 below that, then we could see it. I don't know if it'll fall off the face of the earth, but it may fall significantly from this place. If you're down more than 7% on this, even if you have this right now, I think I would sell it immediately. Now I sold it short, meaning that I borrowed the shares and then I sold them I sold it short today. So that's kind of the situation on Lulu. You know, it's potentially good to make money, but if you're selling short, but right now it's not. You don't want to be long Lulu. All right, let's take a look at SYF. Interesting. Okay, so SYF. Let's take a look. Wow, that's pretty good. That's a good synchrony. Okay, that's a pretty good chart. It's up 53 cents. You bought in at 36.63. That's very good, actually. Yeah, the chart on synchrony is actually you know, looking fairly decent. I'm just going to zoom in a little bit on it to see. Yeah, I mean it's looking very decent. It's above the 10-day line. That's a good thing, and it looks like it's got good power. So here's what I would do. I would set my stop loss right at this 10-day line, and let's see exactly where that would be. See if I can get that. Yeah, there we go. The 10-day line is about 39. So here's what I would do. I would start trying to move my stop losses up on this one. I do think that it potentially could pull back if it doesn't move above 40.69. It's not 40.09 right now. I think you've got some good profit to protect. I would be setting a stop loss at about 39. If it pulls back, then you're going to be out at a good price. They had some nice earnings. So, yeah, so that's looking fairly good. But I think you've got to protect your profits here. I would be setting my stop loss at about 39 on that one as well. So congratulations. That's looking very, very, very good. So let's see thoughts. Okay. Okay. CCIV. Here's the thing about CCIV, everybody out there on TikTok. I realize that they're gonna merge with Lucent, but blank check companies, unfortunately, I don't think they're a good idea until you kind of see how they trade. Now, here's what I recommend on that. Put it on your watch list, and when it goes public, you'll know the symbol. Then wait about 2 or 3 months and then see how it trades, because I just think that it's a little bit risky until you kind of know what they're going to be buying. So that's my opinion, and that's just an opinion, by the way, on CCIV. Let's look at Palantir. That's another question here. PLTR. Now, because we're starting to pull back, it's time to start rotating out of some of the techs into something else. As you can see, yeah, we're down after hours, and I think this is going to continue right now, at least for the time being. Palantir is pulling back, and it looks like it's on a trend, and that trend is not. And remember, the trend is your friend, and right now the trend is down, so we don't want to be. We don't want to be in this one. We probably want to be out of it. It looks like it's losing support. Now, eventually, it probably will. It will regain support, but right now, it's just not a good time. It's pulling back again, and I think it potentially could move back. It's fallen below a key level for me. I had some alerts on this one. It's fallen below an alert. I think it's time basically to fold the 10 on this one at least, and wait for a little bit of time. My opinion on Palantir, but right now, if you're in it and you've got a little bit of profit, I think you consider should be selling right now on that, because the market is moving lower. Okay, my focus 50% in stocks. Would you advise I hold? I think you should hold more cash, Byron. And here's why. I do think we're seeing potentially a market reversal. Let's look at the GBTC. This is an interesting one because I do think this is a sort of a cash-like. This isn't really. This is a weird one because it's Bitcoin and it is not stock. I do like this one in a downturn. So and it's definitely finding support right at the 21-day exponential. So that's very good. This is holding up very well. It's up $2. And we're very close to. We had a little bit of a bubble here, but it looks like it's going to retain. Potentially, it's going to continue on its upward momentum. It looks like it's bounced at the 21-day line, so that's a bullish sign. So I like that one. Let's look at parts. I think you might want to trim your position in parts. Let's see, PRTS. Though one of the things about these stock, yeah, okay, that was no surprise. I think you might want to consider trimming with parts, because even though even though auto parts do very well in downturns, which I think we're gonna have a little bit of here, we don't know. I think that if you have profits in this one, probably a good time to possibly go to more cash on this one. So that one you might want to consider, depending on where you are. Might want to consider. Now FCX is different because it's an infrastructure play. I like this one better because it is Freeport-McMoRan, and I think that even though it's down today a little bit, I do think we're going to see this one move higher. It's 95 relative strength. I think this is one. It's a good one. I think you definitely can keep Freeport-McMoRan. Let's look at ESI here. I'm just trying to go. Thank you for giving me this information. It helps me tremendously taking a look at some of the stocks that you have. Brown Special Chemicals. Okay, I kind of like this one, though I would be careful with this. I would set my stop loss basically at the 40-day line. It's got a nice pattern. It's a cup pattern, but I would be careful on this one. Set stop loss at 1790. It's currently at 1850. Now I know that normally you wouldn't set the stop losses so tight like this, but I think that might be a good idea. I like this one, but I don't love this one. I definitely I love Freeport-McMoRan. I love FCX. I really love GBTC. Parts, I'm a little bit, the jury's out. The SQQQ, now you have to be careful with the SQQQ because remember, it moves against the Nasdaq. Right now it's doing well, but be very careful and close this one quickly. This probably, I suspect that the SQQQ tomorrow will pop. That's my guess based on what's coming on tonight. I think this is going to pop tomorrow. Don't know how much, but I think this could easily move up to 16, 17 by tomorrow. So I definitely think you want to keep that one as well. Seems like you're getting pretty. You have a pretty good layout. We want to kind of go tech light at this point because not only is there a rotation out of tech stocks, but it looks as if some of the other stocks that have been the high flyers, like the Lululemons of the world, it looks like they might be in a situation where they're going to pull lower. Again, as I told everyone out there, I shorted Lululemon this afternoon. Right after lunch, I looked at it and I'm like, well, I'll just short and see what happens. I just shorted one position. I didn't, it's in one of my larger portfolios, but I shorted one position. So I've been pretty much all cash. And again, that was that. Okay, Sam. Tech sector, any hope of recovery anytime soon? Well, it's only a few days. I think here's the thing about tech. We're seeing a movement out of tech. Almost all the tech stocks. I had a bull call spread on Zoom. It produced excellent numbers, and then it proceeded downwards. I closed it. I think the tech ones, we got to be super careful. I want to look at Rocket because that had a short squeeze yesterday. RKT, and of course that's a mortgage company. That's the online mortgage company, and there we go. Rocket Companies. Okay, it's come way back down. No surprise there. Basically, but I think it's going to find some support at about at 25. That's my guess. It's up after hours. It's kind of between 28 and 30. I have a bull put spread on this one. Basically, I sold the 25. That's right here. That I sold the 25 contract. Oops. And then I have the underlying contract I have is the one I bought is the 20. So I have it's a $5 spread on that with 4 contracts. I don't know if you saw that, but I put it out there for everybody on the action trade alerts. So if just when we're talking about the action trade alerts, it's super easy to get onto the action trade alerts. All you have to do is go to Dallas Trading Floor. Need your first and last name and email address so we can send it out to you. It's totally free. we don't, you can quit anytime you like, and it's totally free. By the way, if you're looking on TikTok, it's super easy to get on the action trade alerts. And these are some of the trades that I set up and I analyze and then I put out there. And I'm actually making these trades. I don't just throw them out there like, I'm not doing it. I actually am making these trades. And that's available. It's super easy to get onto it. All you have to do is go to the profile on TikTok, click, it says beacons, and there's a little, tap on that, and then it'll take you to a menu and just need first and last name and email address to be on the action trade alerts list. So that's a good thing. So yeah, I was just looking at Rocket Mortgage. It's pulled back down. It's going to be tough. It's going to be a little bit tough sledding, I think, as we see this, this rotation out of tech into some of the other sectors. Let's look at, and thanks for this, Jim, thoughts on MELI and CMG. Let's look at MELI. MELI. Let's see kind of what's Microlibre. This is a cool stock. This is an Argentinian company, and these are actually ADRs. It's still looking very good, but here's the thing. I think that directionally, I think we got to be a little bit careful on this one. It's moved below the 40-day line. I'm not particularly excited about that. I don't think this one, whereas I think this is very good. I think that, because the situation has changed in the market, I think we've got to be very careful. Here's the thing. Most of the retail stocks like Walmart and like those are pulling down as well. So I want to compare this to WMT in just a second, but it looks as if, this is basically, it's an online marketplace. I think that, this is going to be tough because it's pulled through. It's tested the 40-day moving average. It's below the 40-day moving average. I think we're going to have to be careful. We're going to have to wait until we have a reversal on this. Hopefully it won't pull back to 200-day, but it probably will bounce at the 200-day. But I just think right now, you can't, this is not viable. And I think you just have to be super cautious right now because of the market, the direction. So I think you just have to, watch list. Don't buy if you aren't in already. And and that's just kind of that's kind of the story there. You got to be careful. You got to be careful with this one. I don't, I think under normal circumstances, if we were in an ascending market, I would say go for it. But this has a 55 checklist. It's got great ownership, but it's lackluster. It's lackluster. So I would say avoid it, at least for right now, with Macrolibre. If the market was moving in the upward direction, I'd be more inclined on this one. But right now, I think you just got to be careful. CMG. Let's look at CMG. CMG. Chipotle. And this one just defies gravity. I don't know what it is about Chipotle, but they just defy gravity somehow. It's just amazing. I mean, they tested the 40-day line, it tested the 40-day, and it looks like it's moving higher. But I can't get excited at right now, even though it's up $4.38. It was down $66. I just think this one is I don't think it's I don't think it's what you want to be on. I think you got to watch list this one, and just don't buy now. I just until we get a reversal or some other sign, I can't see. I just can't see it on this one. I mean, this has been a tremendous stock, but not everything has a season. It still has 7 out of 9 on the checklist. The ownership is terrific. 1626 funds in it, and many of the best funds, Fidelity Contra funds. So, I mean, this still has legs. I mean, this if you're in it and you're up on this one, I wouldn't necessarily get rid of it, right? I wouldn't sell it right now, but this is not a good entry point for Chipotle right now. Even though they had great earnings, it's a great company. It's just that right at this moment, we have to be super careful because the condition of the market is changing. We may be, and we're not there yet, but we may be, we may be going into a market under. We may be going into a correction. So we got to be careful. The market is definitely pulling back. All right, has CLF? Thanks, Brian. Has CLF reversed? It seems to be better off lows. Okay, so CLF, of course, is leaving list. Now this is kind of one of the ones that, it's funny. I had a bear call on this. I mean, a bear put spread on this one, and that turned out to be the right. Even though they had great numbers, as you can see, right after earnings, there it is. This is crazy because you think, gosh, they have great earnings. What's going wrong here? This is typical. We came into earnings and look at that. We beat. We were off just 4%. That's all it was. And look, all the selling went on. So right now it seems to be regaining a little bit of strength. If you're not down 7%, I wouldn't sell it. I think it's going to see. It looks like it's going to recover a little bit here. It's basically flat after hours. But here's the thing. I would definitely on this one, because of the changing market, I think what you got to do is protect your profit. I would put a stop loss at 13.25 just to protect yourself. So, I think that protect, on CLF, set stop loss at 13.25. That's kind of where I see it. Let's just make sure that I've got that right. Yeah, about 13.25. That's where I would draw my line in the sand on that. I would definitely draw my line at about that 13.75. That's basically what that is that's right at that's right at the bottom of this spike down here. So this is where the stop loss. This is where I'd set the stop loss. And as it moves up, now we want to see it move above the 21-day line. That's this green line here. And then if it does, then we're okay. But this, when you get these lines, the 10-day and the 21-day that cross below the 40-day line, that is essentially a signal that we are seeing some change in the characteristics of it's not moving as strongly to the upside. We still have a good relative strength line, 91. So I don't think it's time to get out of this, but I think it's time to put a line in the sand. And where I would do that would be about 13.25. That's where I would be setting my stop loss on Cleveland Cliffs. I still think it's good, but it hasn't really reversed. It won't have reversed until it moves above until it moves above the 40-day line, and the reversal will be confirmed at about 1585 is where you're going to see the reversal there. So, but not time to sell yet. But be careful. Hi, Jim. Is there support for Apple and NEO? NEO, unfortunately, has kind of run into a roadblock. It seems. Let's take a look at it. Yeah, it's falling below all my alert levels here. So here's the thing about NEO. It's down after hours. I just think it's a sell. I just think right now it's a sell NEO. That would be my take on it is to basically to sell it. Let's see if I can get that up. There we go. So that's what I'm looking at this chart. I think that at least for right now, I think we got to sell, even though it has this very strong relative strength. The relative strength line is starting to point down. This means that it may have topped. This potentially, by the way, everybody, we're starting to see a sign that this may be a shorting. This may be a shorting. This may give us some potential for shorting. What I think is probably going to happen, and this is let's let's look at the this is essentially a left shoulder. This isn't really a head, really a top, but it sort of is top, and this is a right shoulder. Now this isn't a perfect shorting pattern, but it looks as if this thing will probably make another attempt to come back up to the 40-day line. It probably will succeed and then fail. So right now the selling pressure has been strong, as you can see. The amount of selling has been going up. And notice that most of these lines are red, and there's a very few blue lines. So mostly there's a lot of selling pressure, and it is increasing. So it is looking to me, at least for NEO, it's a good time to sell it. It's a good time to sell it. Now, is it a time to sell it short? I don't know. It's not ready to sell short yet, but this one actually may end up being a short. But I wouldn't short it yet. I wouldn't short this one yet. Let's look at the weekly chart on NEO just to kind of confirm that. Yeah, okay. So, the real tell will be when it gets to the 200-day line, if it does. So, but right now I think that it's probably a good time to close your position on NEO and wait for a better opportunity, because it doesn't look like, at least it doesn't look as if the stock is going to be moving higher, at least not right now. Okay, let's look at the okay, good. Let's see. Watch this. Okay, yeah, let's let's take a look at the next comment. Thank you. Oh, and Apple. Now, Apple's a little bit different. I do think that here's the thing about Apple. Apple made an announcement that they may be coming back in and buying back their shares. So Apple's a little bit different right now. I do think with Apple, I don't know if this is a very good time to enter it. I still want to be. I really want to buy it as it moves above about 137. It's right now at 122, but it is, with the announcement that they're buying back shares, this is viable. And of course, they're just printing money. I mean, it's a great stock in every way on the fundamentals. But right now, I do think the market is turning over, and I don't think it's a good time to be entering new long positions. Now, short positions are different. Here's the thing about Apple: you don't want to short this stock. This is a powerful stock. It's not, there's certain stocks that you just want to be very careful with, even in a down market, shorting, and Apple's one of them because it is strong, as is Tesla. I don't recommend shorting Tesla either. But right now, would I enter a position in Apple? I would probably be getting into cash. I've been getting into cash basically for the last 2 weeks, and I did make a short sell today with Lulu, and then but I'm looking primarily to be in cash and to initiate short positions. And hey, thanks, Arnold. Always good to see. And you're with the SQQQ. I think this is a good time to enter the SQQQ. I do think it's going to pop tomorrow. At least that's what I'm seeing on the chart. So I do think it's a good time to chart. Now, here's the thing about the SQQQ. It moves extremely fast. So when you enter the SQQQ position, make sure that you have a stop loss in it, and not at 7% down, more like 3% and 4% down, because it can reverse very, very quickly on you. But I do believe that tomorrow, when it opens up, I think that that the SQQ is likely to go higher. So I appreciate that very much, Arnold. I think that's a very good comment. Any thoughts on Frog, F-R-O-G? Let's look at Frog. Probably right now in this market condition, it's not really a good time necessarily to be in any of the. And this is going to be hard for you to wrap your mind around, but. I don't think it's a good time right now to be in a lot of tech stocks, because the market is correcting and the tide is moving out, as they say. We've had an incredible run on tech stocks. That doesn't mean that that tech stocks aren't going to have this run again. But right now, I just don't think you want to be in these issues. They had a bad earnings, and that's all it takes, folks. You know, if you have if you have bad earnings, even though they have cash flow, if you have bad earnings, it just is not, it's just not good. Look at the weekly chart; it's a downward trending chart, just not something you want to be right now with the condition of the market. Now, I'm a very directional trader, and so I'm looking at the overall market trend. If the market isn't a confirmed uptrend, then I'm looking to buy things where the funds are moving their money to. And for the last 9 months, that has been tech. I mean, you could practically take a dartboard and throw a dart in it and win with the tech. That is changing. We are seeing movement of capital out of the tech sector because the potential of interest rates. If interest rates go up just slightly, that makes the growth stocks, which have no earnings typically, though JFrog does, less attractive. So we typically see movement of capital away from that. Right now, the capital is moving to the kind of very infrastructure-y stocks. Mining is a top is a top is a top area. So let me kind of show you on this where the money is currently moving. So what I'm going to do here is I'm going to show you a look at the industry groups to kind of see which are moving the best and which are moving which are moving the best and which are moving the worst. Now I'm going to show you this, and this is key, because this kind of how we need to kind of rethink a lot of things. If you'll notice right now, the capital is flowing into certain sectors more than others. You'll notice that after a long time sleeping, oops, get that right there. I'm adjusting my camera for TikTok. You'll notice that metal products distributor are the number one, which is where oil and gas royalty trust. This is where the money is flowing. The money right now is flowing to oil and gas, as you can see that. It's moving from tech into oil and gas. So if we're going to go long on stocks, we want to start looking at some of these oil and gas areas. For instance, let's take a look at the oil and gas exploration area and to see kind of if we can find the stocks that are in this group. Now, the number one in here is EOG. This is doing very, very well, as you can see. So these are the kind of stocks that we want to be looking at, up $2 today. We're seeing a movement right now in early March away from some of the growthy tech stocks into the heavily beaten down oil and gas stocks. So this definitely qualifies as one of those. As one of those. You'll notice that the industry rank is now number 9. Just a few months ago, this was in the worst part of this was like 180 or 185. So what's happening is that we're seeing a movement away from some of the growth stocks into some of the oil and gas areas. And I'm going to be working on, hopefully on the Action Trade Alerts, working on some things in this area. Now, another area that's done extremely well, of course, is what they call the oil and gas royalty trust. And the number one in this, and by the way, I actually know some people over at this is a company in Dallas. It's called the Texas Pacific Land Company, and basically they own mineral rights, and that's really what they do. And they're up strongly. It's a very expensive stock, but it's a very defensive play as the price of oil goes up. If the price of oil goes up, these kind of royalty trust stocks will do extremely well. And this is another one. So I just wanted to kind of just briefly show you kind of what's happening in the market, and the fact that we're moving away from some of the growth names, some of the maybe the tech names, into something that is a little bit different. All right, so let's take a look here. Jim, what are your views on Tesla with the new FSD monthly subscription? Okay, well, I think I'm a Tesla bull long term, but I do believe right now but currently I don't own any Tesla because it's correcting. It's been correcting. So let's take a look at the Tesla chart. I don't think it's time to buy it yet. It will be. We will get another bite at the apple with Tesla, but I think right now we have to be careful. Let's zoom in a little bit on the chart to see kind of what's going on today. We definitely have we're definitely seeing a lot of weakness. There we go. Okay, so there we go. So you can see that's a little bit better. Yeah. Oh, there we go. Oh. Okay, we're definitely seeing, as you can see, in Tesla, you know, it's struggling at the it's sticking right to the 21-day exponential. It's pulled down. Here's the thing that you've got to look at very carefully. We have a situation with Tesla, at least time being, where it's starting to close at the day's low. So this is not a good sign. I do think it's going to pull back, and we probably will get support. We probably get support before the stage one pivot at 502. I do think that, though, that the support for Tesla is probably going to be, it's probably going to be about 680, I believe. Let me just see if I can verify this with the charts. Let's see. Let me get back. There's going to be some more good opportunities with Tesla, but right now, I just think you got to be super careful being in this, because it is essentially, and I'm looking at the weekly chart. Let's look at the daily to kind of see. Yeah, there we go. There's the daily. And I've drawn a bunch of trend lines here with Tesla. Oops, you can see it. Here, as you can see, it dropped below, and this is key. I had this alert here, and you can hopefully see that. Let's zoom in a little bit. 5.75. There we go. Okay, so basically, what's going on here? This is the daily chart. We haven't broken trend here. We're still moving down on Tesla. We've moved below the 40-day line, where we now have a reversal. The 21-day is below the 40, and the 10 is below the 21-day. This is a downward trend. Even though you have a 95 relative strength, the trend on this blue line, this is the relative strength line, is downward. So therefore, we have not bottomed yet. We need to wait on this one until we see an uptrend in this against this relative strength line. It's going to pull back some more. Right now, it's at 656. I do think we probably will see a bounce, basically right at about 600. I do think but being that this is where I think we're going to see the bounce. But right now, I think we've got to be super careful, because I do believe it will bounce and then it will head back up. But right now, we just can't be in. We just can't be in it. It's just too difficult. So not a good time to, the most important thing with Tesla right now is, don't buy Tesla right now. Wait. It will be back. It's just right now, I just think we've got to be extremely careful with Tesla. It's pulling back. It's going to base, and then once it bases, then I think we're going to have another bite on the apple. Tesla is, not done by any stretch of the imagination, but I think it got a little bit ahead of itself. So there we go. All right. Okay. Any thoughts on ENPH? Let's look at ENPH. ENPH. Hey, look. Enphase Energy. Okay, photovoltaics. It's good industry, but here's the thing, and I want to be careful. I think you want to be careful in this area. What's happening with this market pullback is I think we're going to get an opportunity to short some of the solar stocks. They have been, in the last few months, very, very strong, but I think right now they're going to start pulling back, and that's definitely the case with ENPH. So we don't really want to be in the sector all that much. Let's take a look, and I just kind of want to give you an idea. Right now we have an industry rank which is 7, so we're still, it's still very strong, but I do think we're getting to the very top in this sector, and I do think that we have a potential that it might not be as strong as it's been before. Let's kind of look at the group to see sort of where it's charting, just to see kind of where it's charting. So let me see if I can get that group there for you right now. It would help if Okay. Get it so that I can, well, a little bit slow. Okay, so let's go to the group section here. There we go. Let's kind of look to see where solar is ranking. This is very important because we are changing. The reason I'm going back and forth to this list is because I'm trying to see where the market is moving. It's definitely moving, and it's moving away from some of the ones that have been the very best. I'm just trying to look for. I'm just trying to look on this for the solar companies as of last few as of this week, and it doesn't look. It looks like it looks like solar has the alternative energy has pulled way down. Goodness, this is daily change. So let's look at performance here to see if I can get anything on that. No, it just. All right, let's look at just the all the 191 groups here. Yeah, let's look at today's performance. There we go. Let's see if that. No, percent change. We want to see that percent change. There we go. So this percent change, basically in the last 3 months. Let's see which has the best performance. Currently, in the last 3 months, the best performance have been retail consumer electronics. That's interesting. I'm just trying to see where alternative energy is on this one. I do think it's starting to fall, though. Yeah, energy coal. That's interesting. It's doing very well. So I would not. I wouldn't. I would be careful with this one right now. And I think I don't think it's going to be as good as it's been. So I wouldn't buy this right now. That's my opinion on it. I wouldn't be in it. I wouldn't be in this one right now. All right. Okay. Thank you for. Any thoughts on DQ? Let's look at DQ. This is also another energy one. This sector, the one that the photovoltaics are best. I mean, you would think they would do well, but they're starting to move against this. I think where you want to be is not in the alternative energy space right now. I think that the money is moving into the oil and gas. I really believe that based on what I'm seeing. So it doesn't look. It looks like there was a reversal on this one. It basically bounced off the 40-day moving average. It moved up. And it moved above the 21-day and the 10-day, but then it's reversed down. So it's down $15 today. I just think, I think what you have to do on this one, right now is just don't buy it. I think you have to be extreme. Right now, we're in a situation where it's much harder to pick stocks. Right now, I just think with DQ, you don't want to buy this one. If you're in it and you're more than down more than 7%, I would sell it. It just, earnings are in 6 days. I think that this one could really turn negative against us. You can see this by this industry group. We're down 7% year to date on the solar energy group. The capital is moving away from solar energy into oil and gas. And so that's one of the things that, even though it's 7 now, it was number 1 at the beginning of the year. So this is starting to get out of favor right now. Energy solar, we want to avoid this area. So I think we need to avoid DQ, at least right now. And so if you have any, if you have profits on that one, I'd recommend kind of closing them up right now because, it's going to be more difficult. Okay. Thank Michael. What do you think of Nasdaq stocks like Microsoft in the near future next week? Well, that's the very near future. Mr. Softy, Microsoft, is probably one of the greatest of all the bellwether stocks. But even this, there just is a disinvestment out of the Nasdaq right now. That's why the SQQQ is doing very well, because whenever the SQQQ does well, stocks like Microsoft and Apple, they don't do so good because the SQQQ moves against the Nasdaq. So, you know, I was really hoping that we're going to get a reversal here. What happened is it went up to the 21-day line and it's been selling off. So even though I've touted this stock, I love the stock. I've made a lot of money in this stock. Right now I just think it's not a buy. It's going to be retreating here a little bit. So in the next week, I think it's probably going to go lower. And the reason I do is precisely because it violated the 40-day average. And if you can see, the selling bar is slightly above the average, and this is an exponential, by the way. So this isn't a total sell signal here, but this is a get out of the water signal. So I can't be interested. I can't give you a thumbs up on this one. So right now, basically what we have is we have a market trend under pressure. You need to go to 50% cash minimum, and it may change, but for right now, it's just the market is starting to change. Unfortunately, I didn't get to everybody's question, but if you want to possibly write me with a question, I try to get to everything. And I will be back tomorrow, of course. The easy way to do it, of course, is to go to the website, which is Dallas Trading Floor, and send me your questions. One of the things I want to warn everyone out there is that the market conditioning is changing. You want to be at least 50% in cash right now, and possibly even more. I'm more like about 85 to 90% in cash. I do have a few positions. You always want to have positions in there, but many of the tried and true ones over the last 6 months are probably not going to be as good. Companies like Microsoft, companies like Apple, if you're not in them already, I don't think you want to get in right now. This is a tough time. We've got to get into cash. We've got to wait. There are going to be some tremendous opportunities because the market doesn't go up straight, but when it moves up, when it starts to move up, then we can have some better opportunities. But right now, we have to be much more defensive than we've been. So, thanks everybody for hanging out with me. Really would appreciate it if you could go to YouTube at youtube.com/Dallas Trading Floor and like us on like us on YouTube. We would really like that. So hit that hit that like button and subscribe to us on YouTube. We're on YouTube. And by the way, if you're watching on TikTok, everything that I've talked about with the charts and everything will be up in about 30 minutes on YouTube at youtube.com/Dallas Trading Floor. Well, until tomorrow at 2:30, happy trading. Thanks everybody for stopping by. I'm sorry I didn't get to everybody's question today, but stay safe and start moving into cash. Not a great time to be initiating new positions right now. It's a little bit dicey. I think that the market may be changing its direction, so we have to be a little bit careful. But until tomorrow,